CZBusiness.com podcast with Tony Rourke and Kevin O'Flaherty.
CZBusiness.com, making you money.
Share it on Facebook, share it on LinkedIn,
Twitter, our blogs, YouTube videos, listen to our podcast, getting so hot that it's burning up the stereo.
Welcome to the CZBusiness.com podcast. My name is Kevin O'Flaherty from O'Flaherty Law. I'm joined today by my co-host, E.J. Johnson from Ileana Properties. And our guest today is Tony Langford from Polaris CPAs. We'll be discussing IRS representation. So thanks for being here with us today.
Good to be here, Kevin. I appreciate you having me.
So tell me about what you do and a little bit about your background.
Oh, wow. I'm a CPA by trade. So I've got a traditional CPA practice. We focus on primarily small business, but we also work with individuals with tax prep and tax planning. On the small business side, we'll do everything from outsourced bookkeeping with internet technologies in the cloud, technologies that are available today that really facilitates being able to do that and take that back office function off the business owner's plate. We primarily focus on the small business owners, so from startup up to 10 million in revenue, and we can get in and help them with all their accounting, bookkeeping, payroll, all their tax needs from preparation and planning, as well as helping them with various aspects of their business from a consulting standpoint. I've got as we were talking a few minutes ago earlier,
very extensive
very
resume.
background
Yes.
over my many years of business experience, so we can bring that value to the small business owner. So it's not just a numbers and a debits and credit thing, but really helping that business owner hone in on their business and their operation and understand the story behind the numbers, because your numbers will tell you a story that you can and should be using to guide and direct your business and make decisions.
Okay. Well, tell us a little bit more about you got a big background. Tell us about that background.
Oh, boy. Where do we start? I came out of college. I went to DePaul University in Chicago, passed the CPA exam, did a few years in public accounting, and then switched over to industry. And I made my way around the Hoffman Estates area with the few Fortune 500 companies that were located over there. And then I got bit by the tech bug. When I was with ADP on the dealer services division side, which is our automotive and truck business, started doing things with PC technology and local area networks, and enjoyed that computer side of it, and actually left there, went to a small consulting firm. We were implementing accounting systems, surprise, surprise, but also doing the tech stuff, putting in local area networks and setting up computer networks and databases and things like that. So spent about 14 years doing that, wound up getting back into the accounting side full-time heavily about 9 years ago. Started my own practice, and here we are.
Oh, wow. So what have been some of the differences when you first started to right now, like where you're at right now, as far as the IRS and just dealing with taxes in general?
The IRS, especially as of late, everybody knows the condition of the country as far as debts and deficits.
Oh, yeah.
And the IRS is very, very stretched resource-wise, but that hasn't stopped them from getting more aggressive and doing more work in terms of trying to collect tax revenue. So they've really stepped up the enforcement action to try and get outstanding dollars that are owed to them, and really going after taxpayers that have outstanding debt and doing things to collect that. They have a very long memory. They move slow at times, but they don't go away. I equate it to you got the horror movie where you've got the person that's running and the zombies chasing him, dragging the leg, and you're looking at it going, anybody could outrun the zombie, but the zombie always seems to catch up to him. The IRS is like that. They just keep coming and coming and coming until your matter gets resolved, and you can make that permanently go away.
It's like one of those Jason movies. That's what it sounds like, where you just kind of fall and start crawling for no reason.
So you help people out who have zombies chasing them. And that's what we're talking about, the IRS representation.
Yeah, primarily. That's one of the areas I've recently started focusing on. And one of the drivers for that is just the number of people that are currently in the IRS collections division. At the end of 2013, with the IRS stats, they had 12.6 million taxpayers, and that would be individuals and businesses in the collections division. At the end of 2014, there was another 800,000, so it was up to
wow.
12.4. My suspicion is once they run the numbers again at the end of this year, it will be higher than it was at the end of 2014. Economic
Wow.
conditions driving a lot
Yes.
of that with the tough economy that we've had over a number of years definitely feeds into that. But again, they're stepping up enforcement, so they're being more aggressive in terms of going after people and trying to get monies that are owed.
So how do you help people who are getting those letters from the IRS and they feel like their life is crumbling around them and there's there's no out? Is that when they should call you?
Yeah, well, and you described that very well. Typically, the way the IRS contacts people is by paper. If you're getting the phone calls and this sounds like it's coming from somewhere offshore, and you've never had any dealings with the IRS, it's a fraud call. Don't deal with it. The IRS, at some point will contact you by phone, but by then you've got a pile of paper in front of you, letting you know that they've been trying to reach you and resolve some matter. And that's typically what happens. People start getting a letter, and unfortunately, in a lot of cases, they will ignore them for whatever reason. They're afraid of it. A lot of times people, whether they go to file their return or, they have the return prepared and they see this number, I got to write a check for $6, $8, $10, $15,000 and I don't have the money to write the check. What they do is nothing. They don't file a return. They don't contact anybody. And the IRS really looks at those two things, the filing of the return and the payment of the tax, as two discrete actions. So even if you can't pay the tax, file the return, get the return on file as being submitted, and then deal with the money piece later. Typically, when I get a client that's coming in that's got outstanding IRS debt or some IRS issue, on average they'll have 3 to 5 years of unfiled returns.
Oh, wow.
And before anything can be done as far as resolving those matters, what the IRS expects is you get compliance. So you've got to catch up on getting all those returns filed before you can work toward resolving the outstanding matter.
3 to 5, that's the typical?
That's on average.
Wow.
The most I've had so far is 10 years of corporate returns and 6 years of personal returns. And people, they have that same reaction.
Kind of pull back like,
how do people not file their returns?
Yeah.
And more importantly, why? That they're wondering, why are people not doing this and taking care of what they have to take care of. I talked about the average client having 3 to 5 years of unfiled returns. Some of the other characteristics or traits that you see in a typical client. They're in their 40 to 60 years old. Typically, they've got a few kids. They usually run into some life event. Life has come along and run them over. Divorce, business failure, major health issue or major health crisis. So they've had some things that have been feeding into this, and then you get the tax issue and the tax return stuff that just piles on top of that, and they're just shell-shocked by a lot of things. So they withdraw. One of the other things that you'll see with people is they're procrastinators. You get the people that just yeah, I'll get to it. I'll get to it
tomorrow.
And then and tomorrow never gets here. And a year or 2 years down the road, they're getting the letters, and I should deal with this at some point. And that's the other thing. They get in this situation, and then they're going, how do I get out? And they don't know what to do. And that's where we come in. One of the odd things about this type of work is locally there's not many practitioners that focus or make this a main aspect of their business. I'm sure if you guys work with an accountant, and you get a letter because you're already a client, they'll help you deal with that kind of stuff because you're already engaged with them. But a lot of practitioners aren't actively seeking and looking for this work, and just looking at the numbers of taxpayers that are out there.
Okay.
There's a lot of work out there to be had. So it's been a pretty active part of my practice over the past year that I've been really focusing on. Is like I said, with clients in the past, I've helped them out with these types of issues, but really focusing on marketing and going after new clients. I was telling you guys earlier, just in the last week, it's been absolutely crazy. I've been just hours and hours and hours, new opportunities and referrals and leads that are coming in, mostly in this area of my practice.
Oh, wow. Okay, so when you started your practice, was it like a leap of faith, or did you go in knowing that this was what you was going to do? Was it one of those things?
No, actually, it wasn't like that. You know, I've talked to a lot of people, and again, with the economy the way it's been, I really would characterize myself as falling into that category of the reluctant entrepreneur. You know, I didn't wake up at 8 years old and I'm going to be an entrepreneur and go out and start businesses and things like that. Circumstances wound up when I came out of. I was talking about my tech background earlier.
Mm-hmm.
I was working for a Fortune 100 multinational firm in their IT department, and over a period of time, wound up working my way out of a job through corporate restructurings and things like that.
Yeah.
Didn't want to do a relocation, so I found myself out in the job market again. Wound up on a contract, and this is where the gig economy started coming into to play. I wound up on a contract with a financial institution for about 18 months, and contract ended. Okay, now what? And that's where I had the opportunity to make the turn back into the accounting and the finance side with a small startup company.
Oh, wow.
So you've kind of given us your profile of what your typical client looks like in this IRS resolution niche of your practice. What options do those people typically have? You know, if I've got a looming IRS debt that they've been trying to collect from me, what, other than just paying up today?
That's one option.
What are the other options?
They'll be more than happy to take a check.
What are the things that you can help them do to resolve that?
Well, it's funny. The IRS has a sense of humor about these things. For the people that haven't filed, the IRS has what's called an SFR. It's a substitute for return, and basically what that is the IRS files your return for you, and they don't do it in a way that's advantageous for you. They do it in a very straightforward, simple way. So, standard deduction. If you're married, they'll file you as single, so there's a higher tax rate there. So basically, it's an ugly preparation of your return to come up with a tax liability number. And a lot of cases, what happens when we go in and deal with the compliance issue and get the tax returns filed, we will file an actual real return, which, because of its nature and the way the IRS did it, will result in a lower tax liability just by preparing the return the right way, because we're taking all the deductions, we're making sure the income's classified the right way. So that's step number one. So once we get them in compliance and we find out what the actual dollar amount that's owed is, the question is, what do you do next? And the IRS looks at a tax debtor, and like any other debtor would, if someone owes you money and they have the ability to pay, well, we're going to go after them for what we can get. And with the late night TV ads and advertising, the offer and compromise deals and the pennies on the dollar, everybody wants that deal. They see the commercials late at night. I can settle my tax debt for 5 cents or 10 cents on the dollar. Those deals do happen. But you hear the guys on TV, it kind of gives the impression that we'll get you that deal regardless. That's a pretty narrow box that you have to fit in order to qualify for that. It can be done, and if we look at the numbers from last year, I think there were 68,000 offers in compromise proposed by taxpayers to the IRS. They only accepted 27,000 of those, roughly, so about 40%. So 6 in 10 chance you're not going to get one of those deals, even though you can. I met with a gentleman this morning. We were talking about his situation and his case. He appears like he would be a pretty good candidate for that. Multiple properties that he owns that are all underwater, bankruptcy, job loss, so a lot of things that have kind of piled up where, he's got this crater that he's got to dig out of, and the IRS is going to look at that and go, you know what, it's going to be quite some time if you'll ever be able to dig out of that. We most likely won't get everything that we expect that you owe, so we'll settle that for some lesser amount. So short of that offer and compromise, what we can do is get you into an installment plan with the IRS. And this is one of those things. You got the tax return prepared. You're going to owe them $6,000, $8,000, $10,000, and you just don't have the money to pay that. It's pretty much an automatic thing where you can contact the IRS. We need to get a payment plan set up, as we don't have the funds to pay this right now. what can we do? And they'll put you into an installment plan, typically over 72 months, and it's pretty much automatic. So people that contact us with, if they've got just the debt that they owe, $10,000 or less, and they're pretty well caught up on the returns, we'll just kind of give them some help and guidance to how to do this, as opposed to piling more fees on it for us to come in and do something that they can simply and easily do themselves. Here's what you got to do. Here's the steps, and we'll help them along that way. If you've got a larger amount, it will typically be made up of your tax liability, penalties, interest, and other things like that. So there's other things that can be done as far as getting penalties abated or removed, and then dealing again with the tax liability. Do you really owe the amount that they say you owe? So you can work those things within the programs that the IRS has to manage and take care of that.
So you'll help people contest their tax liability too? Is that an option that you'll pursue? So if someone comes to you and says the IRS says I owe this amount, but I think they're misapplying sales tax or something like that.
And that's the thing. We can go back, look at the tax returns, make sure the tax returns are correct, and come down to what the real tax liability should be. And a lot of cases, it's different than what's actually being assessed at that point. And then all of the penalties and interest on that are based on what they've assessed. So if your tax goes down, your interest amount's going to go down because of the tax liability being different than what's actually reported.
So what's the process for that? Is that basically filing maybe an amended return, and or do you have to go through some sort of appeal process?
Well, you start out, if you haven't filed a return, you get the return filed. If they've filed a return, and the IRS comes along and denies deductions or changes things somehow, file an amended return to get an actual return on file with the correct numbers, and then begin to deal with the collections division on what that amount is going to be, what's going to be removed. They can come down with a decision. If you're not happy with the decision and still don't feel it's right, they do have an appeals process where you can go through and escalate that through different layers within the IRS to deal with that initial decision that you still don't agree with.
And what's the go ahead, EJ.
No, you're good.
What's the process for an offer in compromise? What does that look like? I assume you've got to give all sorts of records to the IRS.
Oh yeah, so they're basically going to do the body cavity search on you. They want to know what income you have, what assets you have, and what they're really looking for is what the cash flow is. What do you have coming in? What do you have going out? And there's allowable amounts. So when you go through and do the calculations, you're allowed to have so much for housing and transportation and medical and food and things like that. Mm-hmm. And they're all spelled out in tables. So depending on where you live, how many people you have in the family, if you're married with multiple kids, it's all gated based on those factors. So, they look at, if you've got, $5,000 a month coming in and $4,000 of allowable expenses, which should cover all of your living, they will see that, okay, you've got $1,000 of excess cash flow, and then they'll come up with an amount out of that excess cash flow that you need to pay them to settle your debt.
Now, how much would they typically take as far as percentage wise? Like if you were helping a client and the client penalized was $20,000 in debt and it was legitimate $20,000, how much would they take as far as, let's say that client made $4,000? Like what's the percentage? Like 50%, 60%, 70%?
As far as that excess that they would
that
take,
excess amount.
it's typically 20 to 25%. Okay. Depending on the circumstance, they may adjust that, but they're really looking for that extra cash flow amount that they can then use to settle the debt.
When you do a payment plan with the IRS, and sorry to be all over the place,
No,
I had
okay.
a lot of questions that popped up as you were talking about these three different options. When you do a payment plan, what's the percentage interest you end up paying on that typically?
There's a statutory rate. All the IRS interest rates are published. So the rate on the payment plans are less than the rate they're charging you if you're out of compliance and haven't filed, haven't paid. So you're better off getting into the payment plan with them, and they'll apply the statutory rate. I can't remember what it is.
Do you remember whether it's like a crazy high rate, like a credit card?
It's not credit card rates.
Okay. Okay. Anything else you want to add or share on the topic?
Yeah, we're looking at this from the business side. Businesses can fall into this category as well. One of the other areas are the trust fund taxes. This would be payroll taxes or sales taxes. One of the things that you probably talk to your clients about this in terms of setting up your business. You want to either incorporate or set up an LLC to provide yourself the legal liability protection that you get with having that entity and that organization set up in front of you. One of the things that a lot of people aren't aware of that the trust fund taxes are not protected by that shield. And this doesn't even just apply to the owner. So a shareholder, a corporation, or a member of an LLC can be held personally liable if there's unpaid payroll tax or if there's unpaid sales tax. So if you look at your paycheck and your employer withholds the money that needs to be paid for the taxes on that side, the employer of the business is considered to be holding those funds in trust for the government because those are tax dollars that are owed to them. And what happens in a lot of cases, the employer's looking at the amount of tax that they have to pay in from the withholding, and they've got other business expenses and things like that, and they make the wrong decision. Instead of sending the tax dollars in, they buy supplies, equipment, things like that they need for the business. And from the IRS and the state's perspective, those trust fund dollars are a special kind of ugly. They go after those very, very hard because those are dollars that really, from the time they're withdrawn from the employee paycheck, or in the case of sales tax, when the customer comes in and they buy something from you, collect the sales tax, the government considers those their dollars that you're holding on their behalf. So again, if the business doesn't remit those dollars for sales tax or payroll tax, the owners of the LLC or the corporation can be held liable for those personally. So
even a silent partner who's not managing the business has no responsibility.
What they look for at that point is who the responsible person is.
Okay.
And responsible person can be defined in a number of ways, but what they're really looking for is one is, are they actively involved in the business? Are they making decisions about how the money is spent in the business? So, they've got, they're a signer on the bank account. They're deciding, do I pay the rent or do I pay the tax? But you can, and I've got a case in front of me like this right now, a silent investor wasn't actively involved in the business, but was a member of the entity, and the business went belly up. So now the state's looking for their sales tax money, and they do what they do. They went and looked at the records. Who were the owners? Who can we get in contact with? Okay, we found owner B, who was a passive investor in the business. You owe us X amount of dollars for the sales tax that wasn't paid. And they're standing there going, I wasn't involved in the business day to day, I just invested.
Yeah.
Thank you very much. Even to the point where if it's a bookkeeper or an accountant in the business that isn't an owner, but they're responsible for directing how the funds are spent and managed in the business. There's even been cases where an outside accountant who had bookkeeping responsibility for the business was held as being defined as the responsible person. So the lines aren't always very clear. They want their money, they're going to figure out how to go after it. So, what I need to do in the case that I just described, I have to put together the case that demonstrate that the person that they're going after for these dollars isn't the responsible person, and here are the reasons and the factors why.
Okay.
Still a steep hill to climb, but a case can be made for that.
All right, Tony, anything else you want to talk about on this subject?
Oh.
I feel like I've gotten a lot of information out of you.
Yeah, I know, me too.
So, I think we covered it pretty well.
If someone needs your help, how can they reach you?
They can give me a call. The main number for the office is 847-915-6007. They can get us on the internet at polariscpa.com. And they can always contact you and get to me through you as well.
All right. Well, thanks so much for your time today. Great job.
Appreciate you having me today.
Good job.
All right.
Thank you.